Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Hi, Uncle Roger don't have good feeling about this.
You said that you would demand that the interest rates come down.
Well, I would put in a strong statement.
Do you expect the Fed to listen to you?
Yeah.
Are you going to talk to Powell about this and bringing the rates down?
At the right time, I would.
Oh!
Good morning, good afternoon, or good evening. No idea what time you're watching this, but it is Sunday, January the 26th. It is currently 9:35 in the morning over there on the East Coast, so I am getting this out a bit earlier than I usually do, and I will try and condense it and make it shorter than I usually do. But what I have here on your screen is a friendly reminder of the trade of a lifetime. I have wanted that my 28 years I've been doing this, and it finally took place. 100x. Finally took place. On that last FOMC meeting there in December, we stick by the same protocol for every FOMC day. It's detailed in your email. It will be detailed for you on Wednesday. 1 o'clock, hour before the FOMC decision, the 60-35 puts are at 430 again. The 6,000 puts are at 75 cents. One contract, $75. End of the day, one contract, $12,490. FOMC days are FOMC days. We crush them. But by all means, don't go overloading any kind of position. When you go into an FOMC day, you got 90 minutes, 2 hours of a trade. This is not a get-rich-quick scheme.
Don't fuck it up.
It's a trade. It's all that it is. The amount that you're putting into that trade is exactly what you are willing to let go and fly away and never see again. That's how it works. So anyway, this is a big week. Very big week. This is when earnings begin. Boeing coming on Tuesday, they already pre-announced, and it was fucking horrific. But yet the stock held quite well, touching 180 pre-market, and then, or touching 180, pre-market, and holding right there at 176. I actually got on the phone and did a couple of one-on-one calls yesterday, and one of the people I spoke with is an employee of Boeing. Stock price does not resemble what is happening over there on Boeing. As you guys saw, SPX Scalper, she took a trade on Boeing. On Tuesday afternoon, we get Starbucks. Starbucks, nice little fun thing, you know. Kamala Harris loves it, except for the red lipstick that you get on the lid, the white lid, and, you know, she wants to change the color of the lid. Granted, Starbucks produces a fantastic product, especially that nice hot coffee in that chemical plastic lined cup that they present and give to everybody who drinks Starbucks. And then on Wednesday morning, it's really nothing. I know a couple of you follow ASML. Again, if you want any stock whatsoever, all you got to do is ask me. I have all of them charted. All of them are, well, I won't say all of them. Most of them are updated. And Wednesday, after the FOMC meeting, after the FOMC decision, we get Tesla, Meta, Microsoft.
CEO and Puerto Rican gigolo Mark Zuckerberg flew down to Mar-a-Lago to meet with Donald Trump, and boy, are his knees tired.
Do what you want with IBM. Thursday before the open, UPS, just reaching back to its pre-COVID highs. And then Thursday after the close is Apple. Google and Amazon are not in the list, and they will be next week. And I don't know off the top of my head when we get the report for AMD or NVIDIA, but obviously they are not on this scheduled for this week. So anyway, let's get going here. SPX, red close, Friday. Nothing to, like I shared for you in the email, nothing to jump up and down and start screaming about that it's coming, it's coming, it's coming, it's coming. Because we have gone 7 multiple times since Israel invaded Gaza and we hit that bottom on October 27, 2023. We have gone several times, 7 consecutive green days in a row. However, like I shared for you in the spread room, it's there for you if you want it. Paying $3 and yeah, even though, like I said, have a bottle or a bucket that you can piss in because you are not leaving your screen. You weren't able to leave your screen, and you did get yourself there $3 credit, full credit, 150% on the trade. And as I said, going down to 60.93, we went to 60.88.74. So, call it what it is. But what I have highlighted for you here, just underneath, going into Monday's trading session, Monday being the second full week of the month, Monday will be 10 trading sessions since we have not had a minus 1% trading session. It's not a major alarm. As you remember, when we were coming through November into December, we had 21, which was unheard of. Same thing with the plus 1%. We went 29 trading sessions without one. All of this during the Trump rally, coming off of that 57.22, 57.82. Bam, the gap up on the Trump win. And what did we do? We filled that 57.82 perfectly just a week ago Monday. From that week ago Monday, we are now up a little bit more than 5%, 6%. I'll get to that. It's in the charts anyway. But again, for you guys who do your spreadsheets, simple little thing you can do. I don't have it here. Do I have it here? I don't have it here. I have it hidden. I do the Fibonacci retracements for everything. Actually, I do. I do them on the spreadsheet as well as on the charts because, just simple to keep seeing the same number over and over again. And yeah, 61.28.18 being the all-time highs, 57.73 being the lows from 2 weeks ago tomorrow on Monday, and just a simple calculation. One minus the other, multiply by 23.6, minus where you started from, and you got 60.44, 59.92.62, 59.50.75. Just a simple way that you can do Fibonacci retracements so that you have a bird's eye view as to what the downside pivots will be when you do start to get a turn to the downside. But as you can see, the range has been extremely compressed, and that is typical. When I start to struggle with my winning percentage, as you saw, I failed there on Thursday, 6105, 6100s. We failed. We completely failed on that trade. I start to struggle with these risk trades when we start getting that compressed ranges, because it's very difficult getting that turn perfectly counted and continuing to have these plus 100% trades that go full credit on the SPX call credit spreads, the put credit spreads. But overall, after time, like I've told many of you when we've done our one-on-one calls, do one contract. Do it for the entire month. You're going to understand and learn why you are making money. And at the end of the month, regardless, having started with less than $500 at the first day of the month, you're going to wind up at the end of the month somewhere with $2,500, $3,000, $3,500. And that alone is enough energy to want to motivate you to understand that you just made 500% on your money from the beginning of the month, 400% on your money from the beginning of the month. Dan gets it quite well. On to the QQQ. One last thing over here on the SPX. The month, we are 354.87 points for the month. So satisfactory, very much so. 2 green weeks in a row. Not an alarm, but something to be very, very aware of. Come over onto the QQQ. Again, same thing on QQQ. 2 green weeks in a row. Not an alarm, something to be very aware of. Once again, 1, 2, same thing, 10 days. It has been 10 trading sessions on Monday since we have had a minus 1% day. Where would minus 1% be? Let's go and see here. Minus 1% would be at 524.33 on Monday. Where are we for the... I haven't done this. Where are we for the month? Let's go and look at this. 529.63. Where we closed. Where did we open the month? Excuse me, 514.30. We are up 15 points for the month over here on the QQQ. Again, nothing to be alarmed about, but at least better than that 0.22 green month over there in December. Onto the IWM. IWM, again, 5.76 points on the month, 2 green weeks in a row. Touched 230, retraced off of 230. But as you can see here on your lows of the week, you're holding above 225. Holding above 225, holding above 225. In fact, you have a tiny little gap back there to 225.46. 226.55, 225.46. Couple of red days, couple of gap downs, but again, same thing. We are now embarking on a 10th trading session. Let's see where it is. A 10th trading session on Monday since the IWM has had a minus 1% day. Not an alarm, but something that you need to be very, very aware of. So that about wraps that up, and I think that we can start moving on to the charts. Throat is still a little bit raspy coming off of last week when I got sick. So anyway, SPX. This is my detailed chart that I use on my screen constantly every day. And this is where we are looking at the bounce. The bounce coming off of 577.331 2 weeks ago on Monday, having opened at 57.82, which was exactly what we were looking for our downside move. And we have moved 6.14% to the upside. Of that 6.14%, I've got to go and look because I have it here in the email, but I remember off the top of my head, it is 140. Make sure I got this number right because I am good at typos. 140.51 points of this 354 points are all gaps. This is your CPI gap, the big one at 59.05, 58.43. Your 59.75, 59.37, 6,007, 59.97, and the recent one, which was the one going back from, on Wednesday. It was here over the weekend. This is your Martin Luther King weekend here. I was looking for us to be able to be on Wednesday that we were going to be filling this gap, 6,007, 59.97, with the move down to the 50-day moving average like I shared for you there on Thursday. I got punked Thursday or Friday. I don't remember when it is. We hit the 50-day moving average on the ES futures on Inauguration Day. That was the expected move that I was expecting we got. Sorry for saying expecting twice, 3 times now. But we didn't get it in the regular session. And now, thus, we have 4 big gap ups in a row. Looking at it from a detailed point of view, you can now count 9 waves up. And there has been 0 retracements of any of these. You have not taken out a previous dip low. The first one being down here would be that 60.75. 60.75, and you've got your 5-day moving average moving up to 60.75. The moving average is another one. We have not touched any of them in this move to the upside for any kind of dip, any kind of support. I don't recall if we did back here on Thursday last week, but I don't remember. Again, coming over here and looking at it, 60.75 is a big, big line, which I already have drawn as a pivot, and it has been working consistently during the duration of these last, call it 3 days, Wednesday, Thursday, Friday. So 60.75 is as low as we should be expecting, and a little bit of a change, of course, if we do see that drop below 60.75. Here, I'll stick with you here because I think I do have a little bit to talk about here. Because on a wider view, this bounce actually will... I need to change this. Sorry. I apologize in advance. I'll keep you on the 1 hour. Shit, that didn't get it. Fuck. Because it was December 6th, you stupid bastard. Okay, so your move to the downside coming off that 1699.97. Boom, boom, perfect ABC, big wide view. 100 extension, 57.82. Bang, did that, done that. Coming off of this, there is no structure whatsoever because we have not had any dip other than that initial dip coming there on January 14th. Nothing, zero. So again, I stick to the view that I have of this being an impulsive bearish wave to the upside. I'll share something with you as well, which will give you an idea as to the uber bullish only go for upside view, looking at this as the exact same thing. So the question is this the bearish B bounce? And now we get the big C? Or is this the wave 1 of wave 5 of wave 5 of wave 5 of wave 5, and we're due to get wave 2, 3, 4, 5, and the blah, 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 blue, blue, blue bullshit of 63, 6400. I don't see it. 50 retracement from this move to the downside would be right there, right around that 59.50, and lo and behold, that would take you to your 50, 10, 20 day, and just happened to be the trade that we were expecting to get at the beginning of last week, which we didn't get because we only got it on the ES futures. Move you in here to, again, the new moon. The new moon window is wide open. It opened on Friday, and it closes a week from Monday. It's 3 days prior to, 3 days after. It's great when it happens on the actual date, but it's a window. And again, this is a art. It's not a science, but you can go back as far back as you want to go. New moon, full moon. These coincidentally line up very, very cleanly with where we are in our Elliott wave, with where we are in our momentum moves. They line up. They're, I would give you, better than 95% accurate. And I had 61.28, like I shared with you, and I'll share with you in a little bit here as well. So, anyway, again, looking at it from a bigger, broader, wider view, again, you can go back as far as you want to go. As far as you want to go. You will see this be a consistent, not as consistent as a full moon, but a very consistent warning system to give you a very clean and good idea as to where the possible view for the next move is going to wind up being. Come over onto your IWM. Now, having looked at your SPX and seen that we placed a new all-time high.
But I am telling you right now, that motherfucker back there is not real.
Tell that to the Russell 2000. The Russell 2000 has fractionally retraced 50% from that horrific sell down. And here you are, banging right on that 230, holding 227 just to give everybody a little bit of hope. Come over onto your Dow Jones, or sorry, here we are on the QQQ. QQQ, not posting a new all-time high. This, again, you got big earnings coming out over the course of the next couple of days after the FOMC. I'm not throwing any monkey wrenches out there talking about QQQ is eating a big bag of dicks and we're going down to 380. Those earnings with the extremely high multiples, they're still out there. So again, you've got 1, 2, 3, I think maybe you have 4 gaps that are there from this recent week. But we'll zoom out a little bit. We will zoom out a little bit so we can see where we are talking about here with the QQQ. And again, seeing here 498, which we coincidentally came up to right there in September. The 498 equivalent is the SPX 6128. What I mean by that is we are talking about the move coming off of the COVID lows onto the 2022 highs, down to the 2022 lows, being right there, bang, bang. And as you can see from a zoomed out point of view, I don't know, yeah, I think these are accurate, up 200 points from the COVID lows, coming right onto the 200 extension, makes all the sense in the world, up 100% from the 2022 lows, I believe. You have your clean 1, 2, 3, 4, 5. That's the way it looks, that you've got a clean 1, 2, 3, 4, 5. And yes, though you've got to see a lower low breakdown below 500 to confirm that. Possibly, maybe one little tag to the upside before you do get the downside move. And again, just to clarify on that, these are your gaps. All gaps get filled. Whether you like it or not, all gaps get filled. The question is, when do they get filled? And I'm talking about these gaps down here at 170. They're all going to be filled.
Huck, and spit on that thing. You get me?
So, again, over here on the QQQ, yes, it is only 3 gaps. 3 gaps to the upside, I believe, because the one day did have a negative day to it. And again, looking at it from a structure point of view, big downside move. You got your bounce, the downside move coming right to the 100-day moving average. I forget how many percent we were down. Let me look back. I don't have it here. Do I have it on another chart? Let me look in. I apologize. Let me just check. I don't have it, but oh fuck, I got it on my spreadsheet. What are you doing, you idiot? On the downside move there from the recent move, it was a minus 7.32% dump off of the FOMC, where we placed the highs coincidentally prior to the FOMC meeting, and then we had the big dump down to 499.70, minus 7.32% drop. So again, leaving on that, again, your structure here on the QQQ at 530, a move down to that 525, 524 would be ideal and would begin starting to show signs of, hey guys, guess what? The shit's about to hit the fan. Again, over here on the Dow Jones a little bit better than the Russell 2000, but still a major sell-off, your FOMC dump. And here we are with just nothing but upside movement. I haven't counted the waves on this, but I am still looking at this as being a bearish, impulsive move to the upside, and it's overbought like a motherfucker. And then I bring you on to the VIX, which we're going to discuss a little bit more about the VIX here, with the VIX being here at 1451. 1451, 1451. It's a decent little early alarm system, 1451, that, hey, you know what? It would kind of be prudent to go start looking out at like March, maybe June puts. It's an alarm system for that. 1410 is a lot better. And obviously 1339 is like screaming and hollering like, you know, your spouse, why the fuck did you do this? That's when you start screaming and hollering, man, you need to be buying some 3-6 month outputs. This big spike over here is your FOMC meeting. And then obviously you had your gap down right after that. So you do have an unfilled gap over here to be aware of from the FOMC meeting from way back here, way, way, way up above 2102, way above 2371. And this is your recent over the past, look at it from a few days point of view. When we hit that 5782 on the SPX, and we were above 2102, and I was giving you all the signals that that's it, the bottom is in. You got your VIX 2102 as well, because your VIX does not live above 2102. It just doesn't survive. Prior to 2023 beginning, 2102, you never even came down to it. It was easy as hell to go get safe edge spreads. It's not easy down here at 14 to get a safe edge that's worth the amount of risk capital for the amount of profit that you get. Thus, the risk, which I'm pretty fucking good at, is where you're getting your 100, 150%, 400%. call credit spread, full credits. So the VIX, the VIX being the last one I have here, I'm going to bring you up on the VIX option chain because, like I've shared for you there in your email, 50 Cent, prior to the FOMC meeting last month, 50 Cent came out with a $5 million trade on the February 19th, 30 calls, 100,000 of them. That open interest has increased significantly. And you're up here at 377, 720. Now, pulling this out and looking at it from an everything point of view, you can see here where everybody's got their call put spreads. Right over here. Right in the 17, 18, 19, 20 area. That's where you got a plethora of volume over here. You can see almost matching orders. You've got over here your 23 and your 17, almost identical. You've got your 237,000 over here at 19. You got 231,000 over on the 17 puts. This is a big bag of people to be steamrolled, and all that open interest that's over here on the calls, starting at 25. An enormous amount of open interest over here. Granted, it is, it's a penny stock trade. It's down here 30, 40 cents. But this is a hell of a lot over here. And 50 Cent, he's pretty damn good at what he does. So where I'm going to leave you off with here is a bigger, broader, wider view perspective. Because, again, I've pointed it out a couple of times. And bring you back over here onto your SPX chart. And what I have up here at the beginning of 2024. 556. 295. What those numbers represent is we ended the year 2024 556 trading sessions since our last minus 20% correction. We ended the year 2024 295 trading sessions since our last minus 10% correction. So having been 295 trading sessions at the end of 2024, since our last minus 10% correction on the SPX, this is the broad picture that I'm just trying to display for you and why you may understand or may not understand it. Last 10% correction was our dip back when Israel invaded Gaza, October 27, 2023. That was our bottom. That coincidentally was also your 3 red months in a row, right there. Your move here, this 119.84%, I need to zoom out a little bit more for you to see that. That is you coming off of the Christmas 2018 bottom into your COVID high, 119.84%. Joe Biden, after he won, plus 34.48%. And that was where we had our last minus 20% correction. It was a 10-month process. We bottomed October 13th, 14th, peaked first, second day of January 2022. 10 months to get down here to 27.54%. Our last minus 20% correction. Since that, the SPX is up 75.51%. Since our last minus 10% correction, the SPX is up 49.33%. From COVID, the SPX is up 179.59%. So I'm just giving you a heads up, wider perspective view so you don't get your head stuck up your ass and start thinking, well, everything's been green, everything's been green. Yeah, that's typically the way that it fucking works, genius, until everything rolls to the upside. So don't take it for granted. Looking here on the QQQ, again, from a different perspective and view. Your big three, your big four, which I forget the number. This was a 17%. Let's pull it up and make sure that the number is correct. Come over onto the QQQ, and yes, was it? No. A minus 15.9% decline as the SPX declined 9.7%. Everything's inside the QQQ. You get a bigger move on QQQ than you will on the SPX. Your big three, your big four, boom, boom, and from there a very clean looking 1, 2, 3, 4, 5. The nice dip down here to 499, just below 500, and here we are with a lower high as of now, as we're heading into earnings with the FOMC meeting coming up. A move to the downside would suggest we'd be looking at a break below 495. We'd be filling this one gap from way back here on November 6th. We still have not filled the Trump gap. This is your Trump gap right here. This is the only index that has not filled the Trump gap. And then your big FOMC gap from back here on September 18th. And if we possibly started, we'd be looking down there in the 450s, which again, buying strikes down here below 500 is a moronic decision to make. Stick with 500 and above. Go out 2 months, 3 months, 4 months, 5 months, 6 months, 8 months. Regardless of how far you go out, throw this on here. Let me make sure I've got it right. Big charts will work. And we'll just remove these just so they don't clutter everything up. The 200 and 400-day moving average. We are looking at a 6-hour time frame. We'll look at a 4-hour time frame. Regardless of how it works, when you get oversold, you're going to get a warning that you need to be taking the trade off. When you start looking at it from a wider point of view, when your daily gets oversold, you are going to be taking the trade off. Looking here very cleanly at the daily, and one can see a ridiculously large sell divergence on the daily. Let's look at it from a weekly point of view. Gets even worse, where the last time that we were overbought was way back here in AI Mania June of 2023. These things don't fix themselves until they fix themselves. And that fix themselves is down there when you get your sell-off. So, to not get too technical, again, this is your SPX. These are your gaps. Boom, boom, boom. And again, looking at it from a bigger, broader, wider view, these are your gaps. And your gaps, sorry, but your gaps get filled. That's the way the game works. Where you're at right now, very possible, very calculated, and very detailed, with everybody and their mother now starting to realize, yeah, the market may have just topped. It might be a good time to take a little bit off the table. So anyway, guys, like I say, your full moons are a lot more accurate. What I'm looking at, for me personally, just pull you out here and boom, boom, boom. No, that's not going to give it to you, but this will give it to you. Oh, I put it out too far away. I'm sorry for wasting your time. I'll move it in. That's what I'm looking at. The new moon, we're right here, putting in the high. I would be looking for the full moon coming in the middle part of February, somewhere down here in the lower 5650, 5500 range. Call it what it is, but that's what I'm looking for. So anyway, guys, enjoy your Sunday. I don't know if there's football on. I don't even know who plays football. I couldn't name you one player. Enjoy the football. Enjoy the Super Bowl. Enjoy whatever it is that you got going on. And I will see you in the chat room tomorrow. Enjoy your weekend. Thank you very much.
So you know how those lids are, because this is, well, I'm just gonna speak, okay? So this is it. So you know how those lids on those Starbucks cups, they're white, right? And so if you wear lipstick, they get all over the lid. And so then I find myself in meetings if I'm the only woman, and that's kind of, and so I keep taking the lid off and having my cup out so that I don't have that big lipstick mark on the lid. So I said, can we do something about the color of the lid? So that was that conversation.